Yeah. Hello, my dear students. A very good morning to all of you. And this is Shiva Teja here back again to discuss with you some interesting point about our CA final IDT paper review. I'm sure that most of you have performed extremely well, and I'm so glad and happy that this paper has come out so well. Very conceptual paper, and at the same time, students who would have done reasonably good would have definitely written well in the examination. So now let me spend a little bit of time on discussion with you in terms of what kind of questions have come in the examination and what approach should be there. This will help two categories of students. Number one, those students who have written the exam in the May 24 itself, so that they'll get a clarity in terms of what they have written. And second category is those set of students who are writing, preparing for the next attempts. They'll also get a clarity in terms of how do we approach the paper. So it was a good paper. I actually felt so happy, and I was even more happy that I received so many messages from our students that they have performed extremely well. And majority of the questions that have come up is from the similar pattern what we have discussed during the lectures. That gave us even more happiness that similar pattern questions have come in the examination. So without any delay, let me take this forward and discuss the interesting questions which have come up. I'll share the screen. I believe that screen is visible, my dear students. Yes, perfect. Thank you. Come on, let me proceed, my dear students. See that, come on. So we have got 30 marks of MCQs and 70 marks, of course, is our descriptive paper. And I'm going to talk with you about the descriptive part itself. And I personally interacted with a lot of students who wrote the exam, and they have clearly communicated to me that most of the MCQs were comfortable, but there were 4 or 5 MCQs which were more tricky, and that took a little bit more time for them to answer. But apart from that, rest of the things were very, very comfortable. Come on, my dear friends, let me look at the first interesting question. And this question came in the examination for 14 marks, my dear friends. And of course, when it is 14 marks question, that will definitely cover some interesting points related to tax liability, that to net GST liability, input credit, output tax, net GST payable. Please see that. XYZ Limited, a registered supplier under GST in the state of Tamil Nadu, is engaged in providing various kinds of supplies of goods and services. It provides following information: outward supply, supplies a consignment of goods in territorial waters to Vikram Industry registered in Kerala. And the said territorial waters is located at a distance of 12 nautical miles from the baseline of Kerala and 11 nautical miles from the baseline of Karnataka, Tamil Nadu. So we'll always see what, my dear friends, the baseline where it is nearest located. When supplies in territorial waters, nearest baseline will be considered. Next. Pure labor services of construction of single commercial unit located in Delhi, not forming part of any residential complex. This will definitely become taxable. There is a concept of exemption in case of pure labor service of construction of single residential dwelling, otherwise than as a part of residential complex. Exemption is only for a single residential unit, but not for a single commercial unit. When it is single commercial unit, that will become taxable. Next. Supplied 25 televisions over the counter to Vijay, an unregistered buyer who took it to his residence in Haryana. Now, one point is very clear that whenever supply is made over the counter, my dear friends, if recipient is unregistered person and recipient state is mentioned in the invoice, then place of supply will be location of recipient. But if the recipient state is not mentioned in the invoice, the place of supply will be location of supplier. Good. Next point. Inward supply received a debit note in respect of intrastate taxable supplies received in financial year 2021 for the quantity difference as agreed, and these inward supplies were used for all goods manufactured in the factory. For all goods manufactured in the factory. And the date of debit note is 17th October 2023. So one logic is very clear that the time limit for issuance of debit note is what, my dear friends? Due date, the time limit for issuance of debit note is what? 30th November following the end of financial year, or the actual date of filing annual return, whichever is earlier. That is the time limit for filing the debit note by the supplier. Purchase silk yarn from Ravi, who manufactures silk yarn from raw silk. And Ravi is registered in the state of Rajasthan. Very good, my dear friends. They're talking about something called silk yarn. And this point we discussed in the amendment story, my dear friends, where we spoke about silk yarn. Remember that, my dear friends? Come on, what is the interesting amendment what we had there? The interesting amendment what we had there was related to the amendment with respect to RCM in case of goods. But tell me, my dear friends, in this case, will RCM apply? Come on, think properly and tell me, my dear friends. What is that line they have given? Purchase silk yarn from whom, my dear friends? From Mr. Ravi, who manufactures silk yarn from raw silk. And Ravi is registered in the state of Rajasthan. And in silk yarn, my dear friends, there is a concept of RCM in case where supplier is any person who manufactures silk yarn from raw silk, and recipient is a registered person. In that case, my dear friends, it will be covered under RCM. This is a concept of RCM related to goods amendment, my dear friends, which is covered in our syllabus now. Got it? Exactly. Availed services of arbitral tribunal in Chennai, Tamil Nadu for a worth to settle a case relating to Companies Act. Come on, my dear friends. Arbitral tribunal. Will RCM provisions come into picture? Come on, friends. Please don't relax. Give me the answer. Will RCM apply in case of arbitral tribunal, my dear friends? 100% answer is yes, because when arbitral tribunal is giving service to a business entity, that is covered under RCM. Next, purchase raw material from ABK Limited registered in the state of Andhra Pradesh. That means it is intrastate supplies. Purchase a new truck from dealer in Cochin for transport of materials. When we purchase a truck for transportation of goods, definitely input tax credit will be allowed. So in this case, ITC is allowed. Company provided following additional information. Company claimed depreciation under Income Tax Act on the value of the truck purchase, including all taxes. When it is including all taxes, no ITC. This is because of section 16.3, which clearly says that if depreciation is taken on tax component, then you cannot take input tax credit. Company provided a corporate guarantee of 2.5 crores to BYH Limited, its related company having registered office in the state of Maharashtra, for a loan availed by the latter from Mangal Bank Limited, Maharashtra. No consideration has been charged against this corporate guarantee. Sir, this is an amendment related to Rule 28. And in fact, an important amendment which has come up in relation to Rule 28, which clearly says that in case where a corporate guarantee is given by a company to another company, in that case, my dear friends, that will definitely be regarded as supply, and on that GST provisions will apply, and the value of supply will very clearly be the actual consideration is charged or the 1% of guarantee offered, whichever is lower. Getting my point, everybody? This is one interesting amendment which we have very clearly discussed, my dear friends. All of us, come on, please reply. Getting the point, everybody? So this point is very clearly related to Rule 28, which clearly says that the value of supply will be 1% of the amount guaranteed or the consideration received, whichever is, in fact, higher, my dear friends, whichever is higher. 1% of the guarantee received, 1% of the guarantee given, 1% in simple terms, 1% of the amount guaranteed or the actual consideration, whichever is higher. So in this particular case, since there is no consideration, we will take the figure as 1% of amount guaranteed. 1% of amount guaranteed or actual consideration, whichever is higher. That becomes the value of supply. Very, very, very interesting point. I believe that we have got clarity on this point, my dear friends. And in fact, let me honestly tell you that this point we have discussed during the discussion on amendments. And I'm so happy that the same amendments what we have discussed, those points only have come. So what is the answer you would have written? 1% of the guaranteed amount or the actual consideration, whichever is higher. That becomes the value of supply. Can I proceed? Good. Thank you so much. Thank you. In the month of March 2023, company has availed services of interest-rate transaction with a taxable value of 9 lakhs and tax rate of 18%. And the transaction was liable to tax under reverse charge. Payment for the same to the supplier was not made till the current month, overdue for 181 days. So what? 180 days condition is not applicable for transactions covered in reverse charge. However, the tax due was paid to government and input tax credit availed in the month of transaction itself. Very good, no problem. The concept of paying within 180 days is not applicable for the transaction covered under reverse charge, my dear friends. So there is no problem at all. Next point. The accountant did not claim ITC in respect of debit note received for the reason that original purchase was related to earlier years, for which ITC claim eligibility has become time barred. But you should not see the original purchase date. You have to see the debit note related transaction dates. Getting the point, everybody? This is the story of time limit for availing ITC on debit notes. Can I proceed, my dear friends? See, once upon a time, there was a point which clearly told that we have to see the original invoice date. But amendment has come where they clearly told we will see the based on debit note related date only, my dear friends. Once upon a time, the concept was very clear that debit note ITC was linked to the original invoice date. But now the amendment has come long back where they clearly told that ITC on debit note shall be claimed with relevant to the debit note date itself. Done. Next. Invoice issued to Ajay for television mentions only his name and the state. However, complete address of Haryana is missing. No problem. Complete address is not required. Even though name of the state is mentioned, that will be a sufficient compliance, my dear friends. In fact, this point, let me honestly tell you that this point we have covered in our amendments material as well, my dear friends. In our amendment material, I'll tell you with the which page number also we have covered. In the amendments material, what I have given you, my dear friends. In that, where I have discussed place of supply point, in that second point, first point I clearly told with respect to over the counter, where the address of unregistered person is required in the invoice. Place of supply is the location as per address, or else place of supply will be location as per supplier. Simply mentioning the state of the unregistered person instead of complete address would be sufficient. We have discussed this point in the amendment, my dear friends. Next. ABK is mandatory required to issue invoice. However, it did not issue invoice with IRN, although the same invoice was reflected in 2B. If invoice is not claimed, it will not be claimed. turnover for the previous financial year was 190 lakhs and the rates of GST are given. All the above amounts given are exclusive of GST and there is no opening balance of any ITC. And all the conditions necessary for availing ITC have been fulfilled except if mentioned otherwise. And also the details of GST paid are available in GSTR 2B. That is also important because ITC can be claimed only when the credit is reflecting in GSTR 2B. If not, there is no question of claiming input tax credits. Assuming that all inward supplies have been used only for taxable supplies. Company is not covered under any of the exception of 86B regarding transaction on use of available input tax credits. That is your 50 lakh story. That means at least 1% you have to pay using electronic cash ledger. Only 99% only you can pay using credit ledger. Compute the net minimum GST payable to be paid in cash, if any, after utilizing ITC. Wow, such a brilliant question. And this question came in the examination for 14 marks, my dear friends. And I'm sure it's a pretty scoring element for all of us. Next, moving ahead. Second question, which they asked for 5 marks. A banking company registered under GST, where they clearly told about banking company transaction. And we know very clearly that service by way of granting loans or advances where the consideration is interest or discount, that is exempt under GST. But however, interest on credit card will be taxable. So that way they get discount, interest, penal interest, services to merchants accepting debit card, credit card payments using point of sale transaction. In 50% cases, amount per transaction was up to 1,500, where in other cases, amount was between 1,500 to 2,000. In 50% cases, amount per transaction was up to 1,500, where in other cases, the amount was between 1,500 to 2,000. So at this point, we know, my dear friends, where there is a transaction up to 2,000 rupees, then in that case, my dear friends, GST will not apply on the service charge. Getting the point on this, my dear friends? This point we covered in exemptions, my dear friends. So GST is not applicable on the transaction below 2,000 rupees, my dear friends. Are we getting clarity? In fact, there's not a new point as such. It was there in service tax also before. And that was subsequently brought into GST. Clear? Next. Commission will be taxable. Interest charges for late payment of credit card, that will also be taxable. And they have opted for optional method under 17.4. Optional method means what? Straight away you can take 50% of total ITC. But you can't take ITC of the block credits. Balance figure, whatever is there, straight away take 50% and ignore 50%. Next point. Winware 2407 is an online gaming platform. Online gaming, my dear friends, valuation has come up where they clearly told whatever amount is paid on the entire amount, GST will be applicable. It doesn't matter how much the person has won, how much the person has not won, but whatever amount he has paid on the entire amount, GST will apply. This point also we have covered in amendment provisions, my dear friends. Next, straight away question is on customs, my dear friends. That is related to valuation under customs. Cost of machine is imported by sea. Very good. Freight from port of export to port of import. They are paid to seller cost of packing. This cost of packing is always included, my dear friends, not as a condition of sale. This point is relevant only for 10(1)(e). 10(1)(e) says any other cost which is includable and which is paid as a condition of sale. But the packing is not covered in 10(1)(e). It is separately covered. Actual selling commission paid by Daksh Industries to local agent of exporter. This will also be included in value of supply. Any commission or brokerage will be included in value of supply except the buying commission. Insurance charges paid are also not ascertainable. And let me tell you, my dear friends, if insurance charges are not ascertainable, what is it we are going to take? We are going to take it as 1.125%. If right is not ascertainable, we'll take 20%. And if insurance is not ascertainable, we'll take 1.125%. Ship demurrage charges paid by Daksh Industries at the port of importation. Demurrage charges will be included, my dear friends, only if it is ship demurrage charges. Engineering charges paid by Daksh Industries to consultancy firm in Mumbai. If it is consultancy firm in Mumbai, that will not be included. Engineering, development, design, artwork undertaken elsewhere than in India, that will be included in value of supply. Since it is paid to consultancy firm in Mumbai, that will not be included in that assessable value computation. Extra rate is given. That's it. Next point, an interesting question related to place of supply. They gave in the examination where they clearly told crystal clear water limited is a manufacturer of mineral water and registered under GST in Mumbai. CCWL enters into contract with Global Advertising Agency registered under GST for a display in the advertisement on hoardings at an awards event organized at Convention Center, Gujarat. The structure on which hoardings are to be displayed is taken on rent by GAA from Kapoor, unregistered person based in Delhi. Determine place of supply for tax invoice to be raised by GAA to CCWL. GAA to CCWL is very clearly an advertising service, my dear friends. It is not related to immobile property as such. So I'll apply 12.2, my dear friends, and not 12.3. If the advertisement service is not provided, it is just a case where they are giving the hoardings and all. Then that case will be covered under advertisement services. That will not be covered under advertisement services. It will be covered under grant of space. This point I've given in the amendments material in the place of supply in the second point, where they clearly told supply of place on hoarding by vendor to advertisement company is grant of use of an immovable property. But however, if the vendor is responsible for display of advertisement, then is providing advertisement services. Getting the point, everybody? So here they clearly told that they are a manufacturer and they have a contract with the advertising agency for displaying the advertisement on hoarding. If they are just supplying the space, then immobile property provision will apply, we come into picture. But if the vendor is responsible for display of advertisement, then is providing advertisement services. Next. Sunil, unregistered person under GST, is a resident of Delhi and currently posted in Uttarakhand. He went on official visit to Arunachal Pradesh and he purchased a leather bag from Arunachal Pradesh. And the shopkeeper issued a tax invoice in the name of Sunil only. And Sunil returned back to Dehradun along with the leather bag. Determine place of supply. Place of supply will definitely be Arunachal Pradesh, my dear friends, very clearly, because the goods are sold over the counter and the recipient name of the state is not mentioned on the invoice. This point is also very clearly related to amendment in place of supply. If the recipient is an unregistered person, my dear friends, and the address is recorded in the invoice, then the place of supply will be location as per the address. If not, place of supply will be location as per the supplier. And mentioning the state itself is sufficient. Pin 2, unregistered person under GST, resident of Karnal, Haryana, went to Shimla, Himachal Pradesh, along with his family during holidays in the month of October. And due to some medical emergency, he purchased some medicines on 2010 from medical store at a Mall Road, Shimla. And the tax invoice was issued in the name of Pin 2, mentioning the address of Karnal, Haryana. Only medicines were consumed. The medicines were consumed in Shimla during the period of stay. Determine place of supply for the tax invoice issued. Since the address of unregistered person recipient is available, that will be considered. Next point. Sharma, director of VE Limited, provides personal guarantee to a nationalized bank for sanctioning the credit facility of 100 lakh sanctioned in favor of VE Limited. Sharma was not paid any consideration. whether activity will be considered as supply. Come on, my dear friends, whether activity will be considered as supply? 100% answer is yes, because of Schedule 1. Transaction regarded as supply even though there is no consideration. Supply between distinct or related persons. But here, there is one point to be noted. If yes, what will be the value of such service? The value of such service will be nil. The reason because very clearly RBI specified that in case where personal guarantee is given, that transaction is not regarded as supply, but the no consideration is supposed to be paid. When no consideration is supposed to be paid for personal guarantees, there is no question of paying some consideration. When there is no question of paying some consideration, it is not taxable at all. This concept is given by Rule 28, which clearly specifies that for corporate guarantee, GST will apply where the value of supply will be 1% of the amount of guarantee or the actual consideration, whichever is higher. But when personal guarantee is given, the transaction will not be taxable, since RBI clearly specified that no consideration is required to be paid in case of such personal guarantee. When it is RBI norm that no consideration has to be paid, there is no question of taxability that will come into picture. A very interesting question. Next. GHN Limited has imported certain items on 14th October. And according to GHN, these items should be classified under chapter heading so-and-so of customs tariff schedule. Whereas department's view was that these items should be classified under different chapter heading so-and-so. Let's say AB is the opinion of the assessee, that is importer, and AC is the opinion of the department. So there was dispute going on between GHN and the department regarding classification of the product. Meanwhile, an exemption notification was issued. Excuse me. Meanwhile, an exemption notification was issued on 26th October, which exempted the disputed goods by classifying it under chapter heading AB. That means department has accepted in the exemption notification that these goods are classified under AB and not AC for the future imports from 30th October 23 onwards. Now, GHN claimed that since department exempted product under heading AB, hence its items is also to be classified under the same heading, even though it imported goods earlier. Very good. Discuss with the help of decided case law, if any, whether the contention of GHN is correct as per law. So let me tell you, my dear friends, there is one Supreme Court ruling in this case, in the case of Techies Penalpha Limited, which clearly says that when department has given an exemption notification classifying the goods under a particular heading, and that heading is a classification as per the importer also, in that case, my dear friends, exemption can be claimed even though the goods are imported earlier. This is a Supreme Court ruling in the case of Techies Penalpha Limited, my dear friends. Very interesting case law. Make sense, my dear friends, everybody? This was an interesting question, which is a direct question which came in the examination. Next part. Rajwada Operators Limited registered under GST in the state of Karnataka as e-commerce operator. This question was very clearly related to TCS under section 52. And see what transactions they have given. First one, supplies of sale of goods worth 1,47,500 by A Limited, registered supplier of Rajasthan to B Limited, Gujarat. Also, goods worth taxable value of so-and-so sold by A Limited, Rajasthan to B Limited, Gujarat in the month of September were returned back. We should always see net value of taxable supply. That means supplies made minus supplies returned, that will only be considered. Service provided by way of transportation of passenger by motor vehicle registered under GST in Karnataka to Z Limited registered under GST in Karnataka. It includes 1,50,000 against transportation service provided by Omnibus. So one point is very clear here. In case of service of transportation of passengers by way of radio taxi, motor cab, maxi cab, omnibus through e-commerce operator, e-commerce operator is liable to pay as per provisions of section 9(5). And when e-commerce operator is liable to pay, there is no question of TCS. However, this is an amendment related to omnibus, where service is provided by way of transportation of passenger through omnibus by a company, then section 9(5) will not apply and the company only will be liable to pay GST. This point we covered in the amendments video, my dear friends. Ms. Zara of Mumbai books a room for 3 days, 2 nights through Maharaja Resorts, e-commerce operator registered under GST. And MRL is integrated with ROL, who has agreement with Raj Nivas Palace. So one point is very clear. Service of hotel accommodation is covered under section 9(5), except when hotel is liable to be registered. When hotel is liable to be registered, my dear friends, the provisions of 9(5) will not apply. That means who is liable to pay GST will be hotel is liable to pay GST. When hotel is liable to pay GST, then section 9(5) will not apply, but TCS will apply. Getting my point, everybody? And Zara has booked a room through Maharaja Resorts, who is an e-commerce operator, and MRL is integrated with ROL, who has agreement with Raj Nivas Palace. So finally, who is going to make payment to Raj Nivas Palace is ROL is only going to make payment to Raj Nivas Palace. Very, very interesting question, my dear friends. And very clear, it's a question related to TCS. Next question. This question is clearly related to refunds. And this kind of question, so many questions we saw related to refunds. And this question was very clearly related to refunds in case of just a second. Refunds in case of zero rated supplies without payment of tax. And in case of zero rated supply without payment of tax, what will happen is we can take ITC on inputs and input services. In the question they gave inputs, in the question they gave input services. These two figures you take, that will become net ITC into turnover of zero rated supply of goods and zero rated supply of services divided by adjusted total turnover. And turnover within India, that is relevant for adjusted total turnover. And goods exported without payment under LUT, 10 lakhs is given, but domestically they are supplied, the most taxable value when supplied domestically is 6 lakh into 1.5%, 1.5 times, which comes to 9 lakhs. The reason very clearly because whatever value domestically they supplied, that into 1.5 times is only can be the maximum figure that will be considered. Here also 1.5 lakh into 1.5 times will become 2,25,000. So I'll consider the figure of 2 lakhs. That's it. Very, very simple question. All the above inputs have been used in manufacturing process. And the balance in credit ledger at the time of filing application is 1.5 lakh. And the balance in credit ledger at the end of the tax period for which refund claim is being filed. After 3B has been filed is so and so figure. So this figure, or the refund formula, whatever we get, that all the three numbers will be considered, my dear friends. Make sense, everybody? Good. Next point. This question was a very simple question related to baggage rules, my dear friends. Varun Goel, IT professional and a person of Indian origin, Indian resident, or a person residing in India, or tourist of Indian origin. What is the exemption he'll get, my dear friends? Used personal effect and articles other than Annexure 1 items up to value of 50,000 rupees. And he was residing in abroad for the last 14 months. And he wants to bring microwave oven costing 1,85,000 with him. during his permanent return to India. He purchased the oven 6 months before and he has been using that oven for his personal use. He is not aware of Indian custom rules. So straight answer, my dear friends, you should talk about here. You should talk about here Rule 3, which talks about 50,000. And we should also talk about Rule 6 here. If Rule 6 will come into picture only for an Indian passenger. And Rule 6 clearly says about something called if he is residing abroad, if duration of stay abroad is 3 months to 6 months, will get exemption up to 60,000 rupees. 6 months to 1 year up to 1 lakh rupees. And minimum 1 year, you'll get exemption up to 2 lakh rupees. And this limit will apply for items other than Annexure 1 and Annexure 2, but including articles covered in Annexure 3. And let me tell you that microwave oven is covered in Annexure 3, my dear friends. A simple question. Next. In an order passed issued to Sitaram Private Limited, Commissioner of Central Tax, being revisionary authority, has confirmed IGST demand of so-and-so, penalty of so-and-so, interest of so-and-so. They admitted tax liability, penalty and interest to the extent of 220 and 10, but wishes to litigate the balance amount of demand and thus deposits the required amount of pre-deposit, 100% of admitted dues plus 20% of remaining tax in dispute. GST appellate tribunal decides the appeal in favor of Sitaram and they submit application for refund along with refund of pre-deposit along with interest on 2nd July. Within 60 days, they'll grant refund. If they don't grant refund, they'll get interest also. And the department acknowledges the application of the same day. And it is refunded on 15th October. And compute the amount of pre-deposit required to be deposited and the interest payable. Such a simple question actually. And a very, very simple question. And I'm sure that you guys have written very, very well in the examination, my dear friends. Are we clear with that? Pre-deposit is something what you would have done something extensively during your preparation. Make sense, everyone? Come on, guys, speak out. Good, fair enough. Next point. GST department has initiated prosecution proceedings against Sahil, a taxable person under GST. Sahil collected 8 crores as GST, but failed to pay the same to the government beyond a period of 3 months from the date on which payment became due. That means it's a violation, very clearly liable for prosecution. He approached the commissioner with request for compounding the offense. And after considering the request, commissioner directed him to pay 5.2 crores as compounding amount. What is the minimum maximum compounding? Minimum is 25%, maximum is 100% of tax, my dear friends. Is the amount determined by commissioner within that limit? 100% answer is yes. Because his figure was 8 crores and commissioner told 5.2 crores. Within what time period he will have to pay the compounding amount ordered by the order? Once order is passed by the commissioner, he has to pay the compounding amount within 30 days, my dear friends. Done. Pandya imported certain raw material from Japan. However, Pandya was not able to furnish certain supporting documents related to the raw material imported along with a bill of entry for home consumption. He did not file bill of entry for warehousing. He has filed bill of entry for home consumption, my dear friends. Pandya requested the official to deposit the goods in public bonded warehouse for 20 days so that he obtains the required documents. He is asking temporarily, please put them in warehouse. Customs officer initially denied for allowing warehousing and afterwards insisted Pandya to execute an indemnity bond for the goods to be deposited in the warehouse. Examine the correctness of the stand taken by customs officer. That is not correct because this is not a case where he has filed bill of entry for warehousing. He has actually filed bill of entry for home consumption, but since some certain documents or certain details are not available, he requested the department, customs department, to put the goods in warehouse for the temporary period. This concept is technically called warehousing without warehousing. And in case of warehousing without warehousing, the rules or the provisions relating to warehousing will not apply. Next question, guys. 6th question. Under what circumstance revisional authority cannot exercise powers of revision? Revisional authority cannot revise in some cases where order is subject to appeal. One more case where time limit for appeal has not lapsed. One more case is order is already taken up for revision. That means you already started revision, again you can't start revision. One more point is order is a revisional order. That means revisional order cannot be revised. Is there an exception to the above provision? Only one possibility, my dear friend. Such matter which is not taken up in appeal, that can be considered by revisional authority. Next, what is search warrant? Simple point. Who is the competent authority to issue search warrant? Competent authority is nothing but joint commissioner or any person above the joint commissioner. What details should be contained in search warrant? What should be there, my dear friends? What is the violation that is done? What is the premise? Where is the premise that is being searched? Name and the designation of the officer. Which place is being searched? What is the serial number of the search warrant? How long that search warrant is valid? Which officers are empowered and are required to assist proper officer? All the officers of state, center, customs, police, railways, village officers, everybody should support the proper officer for implementation of GST. Finally, one question came from foreign trade policy. This time, foreign trade policy, very simple points have come. Very simple points have come. What does National Trade Facilitation Action Plan aims to achieve? They clearly aim to achieve something called like ease of doing business, increase in the efficiency, increase in the imports and export. That is what they are trying to achieve. And what measures they are trying, what measures are provided under foreign trade policy? They are taking measures like single window system, Niryat Bandhu scheme. They have developed online portal, 24/7 customer assistance facility. So like that, very simple point and generic points actually. So this is our CA final indirect tax laws paper of May 2024, which has come up, my dear friends. And I don't think this is something very critical and I don't think this is very dangerous paper as such. A student who has reasonably prepared and studied some interesting points, have revised all the major topics, what we discussed during our lectures, and also watched the amendments video for sure, then I'm sure he would have definitely cracked the examination. So that's the story of our CA final IDT May 24 paper review. So thank you so very much, my dear friends. Shiva Teja signing off. We'll be back very soon with some more interesting discussions. Thank you so much. Take care. Bye-bye. Have a wonderful day. And all the very best for your examination. Do come out with flying colors. Thank you.